Good morning and welcome to direct tax classes, my dear friends. So, what starts today? Okay, 18 days of classes, close to 140, 150 hours of classes, and at the end of it, my objective is three things. One, my passion on this subject should become your passion also. Second, I should ensure that I instill the confidence in you and ensure that you score maximum marks among all the 8 subjects. Okay. And three, to understand the subject in a much better fashion. Okay. So, fortunately or coincidentally, we are also starting with the budget day. Okay. So, you will be this budget is not applicable to you as a student. This budget will be applicable to you as a chartered accountant. Okay, so when you become a chartered accountant, this budget will be more relevant for you. Friends, first a small introduction about how we are going to go about in the classes, what are all the various sessions, how we are going to cover all these things, and then we will not waste time, we will straightly walk into the subject. First, I want you to understand how this entire process is going to work. Give me a second to change the recording mode. Friends, hope my screen is visible to you and my voice is audible. Okay, right? Can somebody confirm it to me? My screen should be visible and my voice audible. My Excel should be visible to you.
Yeah, sir.
Yeah, okay, fine. Thank you. Right. So, the classes are going to be, let us take that it is split into 4 categories or 4 parts. Okay. So, in the initial part, that which we call it as part 1, I am going to cover for you PGBP, okay, which is going to be the main arena of our focus in this particular segment. But okay, there are other things. PGBP we are going to cover. We are going to cover capital gains also in this segment. IFOS we will cover in the part 1. Okay, and some of the deductions and other AMT provisions okay, small provisions we will be able to cover in this particular segment. In this particular segment, here PGBP, which we are going to start today, okay, it's the major thing, but of course, capital gain as a standalone question. Okay, then comes the part 2 of our discussions, which will be full of assessment of entities, which will cover companies, firms, trust, individuals, okay, and all the other entities which you are going to have, okay, special entities, all these things will be okay, will be part of it. To do this, we need to do PGBB at length. To do this particular assessment of entities, we need to know PGBP at length. That's why I start with PGBP, and so that our confidence level gets increased when we discuss 3 times, 4 times, because that is the chapter which people will say will be challenging, etc. No, let us make it simple. Okay. Part 3 is full of administrative provisions. Okay. Where we are going to cover filing. Okay. Where we are going to cover filing, assessment, penalties. Okay. All these segments we are going to cover in part 3. And part 4 is going to be international taxation. Part 4 is going to be for you international taxation. okay, which we all know is a dedicated 30 marks. International taxation, okay, is going to be a dedicated 30 marks for us. Okay, so that will be part 4 of that segment. This is how we are going to divide. If you ask me where we are going to study this salaries, house property, clubbing set off, we will study at various places. Exclusively, we will study it when we go for individuals. Assessment of individuals, we will study these things, and we will also study it when we are doing all the other assessments. Okay, not just as a standalone chapter. As a standalone chapter, we will study when we are doing assessment of individuals, but when we are doing various other chapters also to study set off, we need not study. It is not like our inter where we have to study set off then come to deduction. Now, to a larger extent, the base idea is there. Okay, I am not taking it for granted that whatever you studied in your inter, you remember. Definitely, I know I can understand what you can remember, what you cannot, or how you can recollect this particular arena. So, the base idea is there with you. We will build on. When we do PGBP, when we do assessment, we know how to do set-offs. At that time, small set of provisions we will study. But anyhow, when we are doing assessment of individuals, we will study all these chapters as standalone chapters for you. So this is how our progress is going to be. The first few classes are very important for the rest of the classes. Unless we understand PGBP at length, unless we understand PGBP at length or capital gains at length, your other topics will not be very friendly. If we go for assessment of companies, at that time I recollect section 40A3. At that time, if I recollect section 37, it will become, if you are missed out to be part of 40A3 discussion, or if you are missed out to be part of section 37 discussion, then you will feel that there is a misalignment. Okay, so PGBP is mandatorily to be understood. PGBP and capital gains mandatorily to be understood for all other chapters also to fall in place. That is why we are starting with this particular chapter, and that is why that is how we are going to look at the entire structure. Okay. The CA Institute has given us the mark breakup for these things, but the mark breakup need not work out in the same fashion. Okay, so let us have the mark breakup discussion later. Okay, we all know that this is 30 marks and this is somewhere around 10 to 15 marks. It depends. It can come to 10 to 15. And all these 4 areas, these, okay, if somebody says PGBP is for 10 marks, if you club it with assessment of companies, it can have that inbuilt 10 mark inside that. So exactly dividing the marks is only very theoretical and not absolutely practical. So keep these things away, little away. So, but you will understand it on a holistic basis. You will understand everything on a holistic basis. You will know how to apply it. Okay, let me break some of the myths, but before that, please keep your mic on mute. Okay, you can switch off the video also. Whenever you have a query to me, you can switch on the mic and ask me. As of now, put your mic on mute mode. Okay, so I have to break some of the popular myths that are prevailing. One is the subject voluminous. I would not say it is voluminous. It is interesting. It is voluminous because we don't know how to start approaching this particular subject. There are so many things, how to study, what is the pattern of study, that is where we miss it out. This subject is not voluminous in its technical term. Sir, how do you say it is not voluminous? So many sections, so many provisions, so many case laws. How do you expect us to remember these things? The first thing I can say is, of course, the law is flooded with section, but remember, our examination is slightly focused. Our examination does not wander around between all sections. To a larger extent, we can see how the examiner's pattern of question is. To a larger extent, you can also understand that the most popular or most relevant sections will only be questioned, not otherwise. So in that manner, I am bit confident that this will not be a very challenging exercise to you. This will not be a very challenging exercise to you. You can match it. You can map it. Okay. So though it is having, we can definitely at the end of it say that this is the pattern of our study and this is how it has to be approached. This is something which you should remember. This is voluminous, but not confusingly voluminous. It reveals a systematic voluminous exercise. When you are going by that system, the volume becomes shrinked and you can definitely focus upon the areas, be it your May exams or November exams. More so if your May exam, we can even pick it out and say these are the areas which they are going to question, but it includes the November exams as well. So it is not going to matter. So don't worry about volume of the subject. Okay, that is something. Second thing is how to remember all these things. Well, if you want to sit at home, sit in a corner, take the book and remember, that becomes difficult. That becomes really difficult, or it is close to slightly impossible. But what we are trying to do in our classroom is to repeat it number of times. To repeat it number of times, by the end of it, you will have definitely had, you will have the idea. You will, if not 100%, 50% of the citation, you will remember it. 100% of the judgment, you will remember it. 50% of the citations, 50% of the most popular section numbers, you will remember it in the classroom itself. And 100% of provisions and judgments, you will remember it. When you come to the revision classes again, in revision classes, we are going to repeat it twice. So after our classroom is over, you would definitely prepare it once. And then when you come to the revision classes, again, twice we are going to remember. By the end of revision classes, you will be remembering a lot of citations, relevant section and most repeated provisions, etc. And then with the help of all those things, we can go ahead and write. So never worry about remembering the whole thing or never try to mug it up. You will, if you have the ability to mug it up or the ability to store it, that is different. But for those who are not having the ability, that fear should not bring you down. That fear that I am unable to remember need not bring you down. Be sure by the end of the classroom sessions, you will be able to remember everything. By the end of the classroom sessions, you will be able to remember majority of the things. Majority of the things. Okay. I know the examiner also knows you have not fallen from the sky. Okay, so do not worry about remembering all those things. Be it citation, be it provisions, be it section number, subsection. You will slowly get accustomed to. You will slowly get practiced to, and as we go down the lane and say these are all the examination questions, okay, you will be able to attend to it. Now, what I look forward from you is 18 dedicated days of attendance. Attendance in all possible manner. But when I framed it, when I was thinking of when I can have these classes, I initially planned Pongal holidays. Then I had a rough idea that these people will extend the due dates up to Pongal, etc. But I never had the idea that the due dates will go up to Feb 15th or even Feb 28th, etc. So I know your officers, if you are a November examiner and if you are, okay, I know your officers to a little extent might be taxing. Normally, Feb is the month of little lean season. That's why I preferred this time. But consider the present pandemic situation made February also for you a very busy month. But if you can convince your auditors and attend all the sessions, this is one thing. For all those who are writing in May, okay, very soon I will take the division of how many of you are writing in May and November. But for all those who are writing in May, you don't have an option about two things. One, you are attending all the sessions. You are attending all the sessions. Number one. Number two, for all those who are writing in May, it is now an unwritten rule. That doesn't mean November I'm exempting. I'm just telling you, for all those who are writing in now May, whenever an assignment or quiz is posted in our classroom, I want you to take it up. The purpose is, I'll tell you, but never miss to take any assignment or quiz. After all, it is between you and me. You just get tested then and there. You just get the feel then and there. You will be able to understand it. For my November friends, also I will tell you that please take up the test and the assignments then and there. Okay? If at all office is very pressing, you are ready to attend the session, but in the mid time or after class in the night, you find it very tired to take up the assignment and test, fine. I will tell you before Feb 28th, ensure that you complete. This is only for friends of who are going to office. Okay. For the friends of regular May examination who are, I believe, not going to office right now, my only request is whenever test and assignment are posted, if you take it up, I can just tell you something. This 18 days, 8 hours of classes, another 2-3 hours you are going to give for assignment and test, okay, depending upon the day. Plus, another 3-4 days before the revision classes, if you go through and come for the revision classes, at the end of the revision sessions, you will be able to go and write the examination. This is like your DT preparation time. This is like your DT preparation time. So ensure to attend all the assignments and quiz so that you are getting super duper confidence before going. This is like preparation. This is not like class and then preparation and then revision. This is class along with preparation so that you can go and get that confidence in our direct tax subject. Okay, so ensure to attend all the sessions, ensure to get all the assignments and quizzes completed within that time. November batch also friends, November friends also, those who are writing in November, try to as far as possible comply with the same. Try to be at live up to this particular level so that you are also on track. Okay. I'm starting again with the statement that the budget that is getting presented today, the 1st of Feb, has no relevance unless it is has no relevance for your May examination because obviously it is not 6 months before. Okay. For those who are writing in November, unless and until if there is any retrospective amendment which has an effect, otherwise this budget is not applicable for you. For all of us in this classroom, our previous year is going to be 2021 and assessment year is going to be 21-22, whereas the budget that is presented today is for the financial year 21-22 and assessment year 22-23. So you need not worry about that. But anyhow, as the class goes by, we can discuss that, we can understand that, but that is for you as a chartered accountant, right? So have a wonderful session of classes, right? I am going to save lot of time for you. This okay? Your the theory in the material. Uh, I will tell you which part to highlight, so that when you prepare, you are able to look into it and see that. That reminds me that for those who have not yet got their material, for those who have registered in the last 2 days, your material, you will get it. For those who have already registered, anytime this today, you will get the material. For others who have registered in this last 2 days, you will get the material maximum by Tuesday. But okay, but you have the material in the drive which I told you, okay, which I have posted. So from there you can pick it up. Okay, what I am also going to do is let us take that the material every day after classroom till whatever we have covered. Okay, every session, after every session, till whatever we have covered, I am going to cut it and paste it and put it in our drive. This is day one, this is what we have covered, so that suppose you missed it to mark in the material, or suppose you are a person who can read it in your uh, computers or ipad, you will find these things highlighted, you will find these things mentioned in the material, so that okay, when the classes are over, you will find some let us take 18 into 2 36 session. Okay, there will be definitely 1 or 2 sessions which we will not be having because of some family functions, etc. So 34 or 35 sessions, you will clearly find the markings of every session, that material, that workings of Excel workings, etc., so that you can pick it up and recollect it also if you want. Okay, that will be more helpful for my friends of who are writing in November. So you can have the marking. This is one thing from my end which I am trying to do for this batch. Okay, because one of the feedbacks I got from the last batch and all, I used to dictate the entire theory. They used to say when you have it in the material, it is like duplication for us. Okay, so I know which theory you have to write and understand which are all the theory. And when I am doing like this, the advantage I get is all amendments I can show it in a different manner to you, because amendments are going to be a questionable area. So like that, I can show you the amendments. Again, when you pick it up from the drive, you will know that these colors are exclusively for amendments. That will also help you to a larger manner. Okay, and important provisions will also be discussed. You will find in the drive the case law material in a little colored manner, where the citations and whatever is the relevant heading for which the case laws, etc. And when we highlight what is the important part of the judgment, you will appreciate it better. So apart from the material in your hand, the material in the drive is also going to be very helpful to you, okay, and very useful to you when you are in the preparation process. When you are stuck at a particular level, you can do it. Of course, yes, my dear friends, you can, the one aspect is you cannot chat with me in the Teams chat box because I'm screen sharing. So I will not even know what you are chatting there. If you want anything, you can definitely unmute and ask, or just text me. I will take care of the rest. Okay. Yeah, Preeti had a connection problem. I hope that is solved.
Hello, sir. This is Saurav.
Yeah,
I'm
Saurav.
not able to see your camera, sir. Actually, I think I'm not sure whether is it an issue at my end or the screen sharing has been stopped. I'm not clear about that, sir. I
Um,
think there are
Sir,
four.
even we can't see it. Yeah, even I can't see anything. Not the video and the screen sharing. Even I can't see.
I'll just do a small thing. Are you able to see it now, Saurav?
Yes,
Yes,
sir.
sir.
Yeah. Oh, yeah.
Yes, sir.
Yeah. 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 I hope now you are able to see. If at all there is an issue, let me know. I'll immediately correct it. Okay. So you cannot chat with me in the Teams chat box. Please put a small message. I will ensure that I will see it. Or please, the best way is unmute and ask. There is nothing wrong. Please unmute and ask. Okay. So this is with regard to uh, our okay, so the materials are going to be also posted, and all the excel workings will be there in the drive. All the excel workings will be there in the drive for you to pick it up, okay, whenever you want. And when you collect all these things, it will be really useful for you to go ahead and ensure all confidence. When I am going to do the Excel workings, I will also ensure that how to present in your examination. I will show you some of the suggested answers, how they expect you to present also, so that together it can be. Okay, never fear the subject, just start loving the subject. You will be able to have the same passion with which the subject, I mean, with which I am doing the subject. Okay, I understood the problem what Preeti was, Naveen and others were, Naveen was especially mentioning. That is, uh, just 5 minutes before the class, I log on. So suppose if you log on by before that, no, it will show as if you have started the class. Okay, that is the problem in Teams. Okay, but I'm trying to address that problem by this evening. I'll solve that problem also. Okay, uh, you're not added to the WhatsApp group. Yeah, Tikshia, I'm right now straight away adding you, Tikshia, because I think I have some other number of you in the group. First, I want to address all your queries before starting. Please ask me whatever queries you have. I think now you are part of this, Tikshia. You can just check. I should have added you to the group. It will be known as DT Final May 21. Okay. So if you have any doubts with regard to any aspect, you can ask me before progressing. Yeah. Okay. Right. Then that's good to go. I hope. Okay. So as I said, the first part of the classes today, we are going to have a small introduction and then go into right bang on in the morning itself to PGBP. Okay. Can anyone forward Google Drive link? I will do that. I will do that for you because it's there as a
Sir,
combined message. I will
Sir,
repost that message for you.
sir, sir, are you able to hear me? This is Antonio.
Once more, friend. Sorry.
Sir, I believe that in starting you said you wanted to record. I think you haven't started recording.
No, friend. Recording is in process, friend.
Oh, it's in process. Okay,
Yeah.
it's not through Teams. Okay.
Yeah, it's not through Teams. It is through a screen recorder software where you will
Okay.
be where it's better to record it through Team Record because Teams has a restriction on the cloud area. That's why.
Okay. 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 Thank you.
Friends, okay, we are starting with the introduction to tax laws. Okay, okay, introduction, okay, to the direct taxation as a subject, which you have already known to a little extent that what the subject is all about. This is a revenue seeking law by the government. The country needs revenue, the exchequer needs a revenue, so this particular law gets importance. The way it affects the various people, we all know. How to study law? By itself, you have been in your law area, in your company law and other allied laws, you are studying something known as general clauses law, both at the inter and at the final level. And at the office, you would have had a small glimpse of general clauses law at when you are discussing with your seniors, with your office superiors, etc. So, how to study this particular law? Okay, whenever you are studying law, there are two types of things called internal aid, external aid. Okay, internal aid within the law, internal aid within the act, external aid outside of the law. Remember, whenever we are studying law, there are two things which comes to our purview. Internal aid within the law, what I have to study. External aid, okay, it is not inside income tax act, it is outside income tax law. Can I refer that, can I take that particular aspect? Okay, so whenever we are studying law, we are going to look into all these things. Okay, what are all the various internal aids which will be very useful? First and the foremost is marginal notes. The first and the foremost is, my dear friends, marginal notes. This is going to be very important. Marginal notes are going to be very key of this law. Have you seen marginal notes? Have you gone through marginal notes? I'll just call out some name and ask. Okay, let me ask the company secretary also in the classroom. Vishal.
Namaste, sir.
Namaste, Vishal. How are you?
I'm good, sir. How are you, sir?
God's grace. What is marginal notes, Vishal?
So the heading of the sections are called marginal notes, sir.
Uh, okay. Yeah, probably high level answer. எங்க லெவலுக்கு ஒரு ஆன்சர் சொல்லு ப்ளீஸ்.
இல்லை சார், இந்த இப்போ செக்ஷன் சே சப்போஸ்
Not an issue.
இப்போ அதர் டிடக்ஷன்ஸ் இப்போ செக்ஷன் 37 எடுத்துக்கிட்டோம்னா அதர் டிடக்ஷன்ஸ் இஸ் தி மார்ஜினல் நோட்ஸ், சார்.
Okay. So you mean to say that the heading or the section heading is marginal notes?
Yes, sir.
Okay. Right. I'll have that answer little later. Anybody else? Can you answer? Can you answer Manasa? Okay, it will take some time for her to wake up. Okay, Ramya, can you answer? What is marginal notes?
No idea, sir.
Okay. Ramya, have you gone through Income Tax Act in your office?
Yes, sir.
Okay. If you are, I mean, have you seen the Bear Act in your office?
Yes, sir.
Okay. If you see your Bear Act, Ramya, if you read a particular provision or a particular section, after that there will be a line, under that there will be some notes. Have you seen like that?
Yes, sir. Yeah.
Okay, that is known as marginal notes, under the margin. Okay, friends, what
Okay.
is marginal notes? How a section evolved? Okay, whenever we are studying law, whenever we are studying it as act, my dear friends, we will be able to understand how that section has evolved over a period. Margin means a line, a space. Marginal notes means notes written below the line. Okay, so if you take a particular section, the most popular now, we are all section 139. The due date of filing return where audit is mandatory is going to be 31st October, and there will be a marginal line under which they would have returned. The due date till this was 30th September till the financial year 1920 or till 31/3/20, like that. So the section has evolved from this level to that level. Marginal notes just tells us what sort of changes the section underwent, what sort of upgradation the section underwent. Okay, in the future, when you study a section, especially for your practical perspective, for the practical world, marginal notes is going to give you one of the best manner of understanding a section. One of the best manner of evaluation of a section will be discussed. If you take Income Tax Act, if you take a normal page and if you find that 400 pages is Income Tax Act, if you take away marginal notes, it will be only 200 pages or less than that sometimes. So you can understand the importance of marginal notes, my dear friends, because unless you know the story, the lawmakers by themselves, this is internationally by default, the lawmakers ensure that marginal notes are provided. Marginal notes is something which is written under the okay, it is written under the particular line. Okay, right? It is how, okay, I hope I, okay, this is how the section has drifted from the original version. Okay, this is how the section has drifted from the original version. That is what the importance of marginal notes has been. Okay, how the section has been evolving from its original. So when you read the marginal notes, you will understand to a larger extent how it is going to be. The second thing which I want to ensure, if you think that preamble for law, you're right, but preamble is not only for law, preamble is for every section, my dear friends. Preamble is not just for income tax law, my dear friends. Preamble is there for every section. What is the story for every section, I can tell you, and I'm going to discuss that. This is not going to be a fast track batch. This is going to be completing the whole subject in lesser number of days. But I am not going to miss out the nuances of the law, nuances of the section, even though it might not be important from the examination perspective, but I want you to enjoy the particular aspect of that law. Okay, that is one reason. Second reason is you should all know that I know. That's okay, at least for that I want to discuss this. But every section has a story to tell you, you know. There are some sections, the story will be so very interesting. The preamble is very, very, very important. Every section has a story to tell, and every section finds its right place in income tax law. Since I'm very passionate about this law, I saw our law, income tax law, our law, that's how I repeat it. Okay, but it might be for all other laws also. You can later contact Vishal. He's more familiar with those things. But for me, let me restrict to income tax, our law of income tax. Every section finds its place. So that is what I am going to try to make you understand. By making you understand that, you will remember the section. Okay. For example, if you take PGBP chapter, if a percentage of asset needs to be given as deduction, they will place it in section 32. A percentage of asset value, if it needs to be claimed as deduction, they will place it under section 32, my dear friends. Depreciation, investment allowance, though it is not there in this year, but investment allowance. Various things which are there in section 32, you claim it as a percentage of the asset value. Where the entire asset has to be given as deduction, they will place it under section 35. Where the entire asset has to be given as deduction, scientific research expenditure, the whole of the cost of the asset can be claimed as deduction. Specified business, the whole of the asset can be claimed as deduction. So, everything is a basket here. If you are putting in something in that basket, the reason will be very clear, categorically clear. So, if today our finance minister wants to promote and they want to give a capital expenditure as a deduction, they will introduce a section in section 35. They will not bring a new section. They will introduce a sub-provision under section 35. Majority of the time, you will be wondering, what is this? 80C to 80U, most easiest I will take. 80C to 80U. Have you studied exactly 80C to 80U? 80C, 80D, 80E. What about 80F? You jump to 80G. After that, you jump to 80I. Suddenly, you will jump some 5 sections because there were sections in between provisions. There were sections in between. Those are no more relevant for you. You will find it in marginal note. There was a 80F, which is not there now. The lawmakers cannot even, 80F is removed some 20 years back. Today they want to introduce a new deduction. They cannot introduce under 80F. We are now in 80TTB, 80U, 80W, 80X. Like that only they can introduce. They will not be introducing it in between. Or even if they want to introduce in between, 80FA, 80FB, like that only they can introduce. You will also find something very interesting in law, which probably you have thought of, or probably I am able to make you think. We all studied in our inter. Let me go to the second part. House property, section 22 to 27. PGBP, section 28 to 44. Capital gains, 45 to 55. IFOS, 56 to 58. 22 to 27, 28 to 44, 45 to 55, 56 to 57. First part I will come. Salaries 15 to 17. Next is house property 22. What about this 18, 19, 20, 21? Where has that gone? Because after that everything is coming in an order, which means from the beginning it should have come as an order only. My dear friends, initially in law there were 6 heads of income. Interest is a separate head of income. Not in IFOS. Interest is a separate head of income which was present because everybody's main source of income once was interest, which was there in that 18, 19, 20, 21. That is why in between you find this graph and then start with 22. That was scrapped some 35, 40 years before also. Now I cannot introduce 18 onwards unless I bring a new law itself in the place of the existing law. Okay, so why I am telling this is the number of sections you will find. So many sections I have to remember. Actually, condensed law down. We are unfortunately unable to understand that in between there will be lot of blocks which are removed from the law. So every section has a preamble. Every section should find the right place in the law. Every section will find the right place in the law, my dear friends. And you can only put it in that basket. That is why if there is an interest-based deduction, they will continue to add on in 80E. So far, when you are all studying inter, you would have studied 80E. That is interest for educational loan repayment. Maximum some of you might have studied 80EE. Now you have 80E, 80EE, 80EA, 80EEB. Today, the finance minister wants to introduce an interest-based deduction. It will be 80EEC. So, everything finds its right place also. The lawmakers, the original lawmakers, not the current, okay? The original lawmakers are visionarians. Has ensured that there are baskets available so that you put the provisions in the right basket, which I am going to discuss. When I am discussing the base of that section, you will be able to understand. Every section has a preamble. Preamble is not just for one thing. Every section has a preamble. Okay, now, non-obstetric clause. Whenever, these are preliminaries to go and understand the law. Whenever we are studying law, we are going to understand two different provisions. One, a superior provision. Two, a subordinate provision. A superior provision. A subordinate provision. Superior provision starts with the wordings notwithstanding. Which we call it as overriding nature. A superior provision starts with the wording notwithstanding. Which means it overrides. It dominates over the other. A dominating provision is known as notwithstanding, non-obstetric clause. Notwithstanding anything contained under 30 to 37. If tax is not deducted at source, or if the tax deducted is not remitted within the due date of filing returns, 30% of such expenditure is disallowed. Section 30 to 37 says these are allowed. Allowable expenses are there in 30 to 37. And I am bringing in a clause saying that I am overruling that. I am overruling that. How do I say? Notwithstanding anything contained under 30 to 37. So, I am overruling it by saying that anything contained under 30 to 37 will not be applicable if you don't fulfill that. So 30 to 37 becomes subordinate section, 40 becomes superior section. 40A subsection 3. Notwithstanding anything contained under 30 to 37, if any payment on a single day to a single person is made otherwise than by account payee, draft, check or approved modes, the whole of such payment will be disallowed. Section 30 says repairs to building will be allowed. Section 36 says all expenses will be allowed. 40A3 says if you have paid it by cash in excess of the prescribed limit, it is going to be disallowed, notwithstanding. So, non-obstetric, this notwithstanding can be notwithstanding anything contained under 30 to 37. Notwithstanding anything contained in this chapter, section 28 to 44. All these presumptive taxation provisions, 44 AD, 44 AE, sometimes they overrule other provisions also. So normally more than 1 crore. I'm generally saying this year there is a difference, there is a small change, but we'll come to that. Normally more than 1 crore is tax audit, sir. But 44 AD says up to 2 crores you can go for presumptive taxation. So you have to overrule 44 AB to make 44 AD applicable. So sometimes overruling section, overruling chapter, overruling tax law. Notwithstanding anything contained under anywhere under this law. In the case of a non-resident shipping company, income shall be 7.5% of gross receipts. 7.5% of gross receipts. You remember? Previous year, assessment year, you saw in 172. Notwithstanding clause, that is. Notwithstanding anything contained under the law, it overrules all the other sections. I am the only section which will stand. Section 172 starts with the word which we will study in our non-resident taxation, which I will again remind you, that is one of the section which overrules law and says I am the only standing section here. So, this notwithstanding word is a powerful word under law. So, all other sections become subordinate. All other sections become subordinate. Antonio, are you there?
Yes, sir.
So, if it is a superior section, they will use the word notwithstanding. If it is a subordinate section, what word they will use?
Subordinate. Enumerate.
I told you section 40 uses the word notwithstanding anything under 30 to 37. Section 36, which is a subordinate provision. What word will they use? No problem?
I think, however, or hitherto.
No. Abhinaya, can you tell?
No, sir, I don't have any
No problem,
idea.
no problem, no problem. Relax. We are here to learn. Coming
Is
back to
it
you
provided?
once more.
Is it provided,
No, no,
sir?
no. Provided is an exception. They say something or it is a conditional thing. Provided you do this, that is different. Coming back to you, Mr. Vishal.
Yes, sir. Sir, is it subject to the
That's
provisions of?
beautiful. Subject to is the word which they will use for subordinate provision. Okay, it is subject to. If you find, if the best answer you will find is, the best place where you will find it, section 36, bonus to employees is allowed as deduction subject to 43B. Bonus to employees will be allowed as deduction subject to 43B, which means if you pay it 43B, statutory payments will be allowed as deduction only if it is paid within the due date of filing returns. Bonus is a statutory payment. So bonus to employees will be allowed only if you pay it within the due date of filing returns. So that is what is this subject to, non-obstant, notwithstanding. Whereas subject to is an subordinate provision. So inside the law, we can find these things. We can find these things. Inside the law, we can find marginal notes, preambles sometime. Preambles can be also an external aid, and you will find notwithstanding, etc. And our friend was now telling you proviso, clause, all these things will say what are all the conditions to be fulfilled. Provisions and clauses are going to tell you what are all the conditions to be fulfilled, what are all the procedures to be adopted. They will refer it to the rules, but these will be available in provision and clauses, and exceptions will also be provided. The most popular word, okay, they use for exception is however. Whenever the law uses the word however, they are going to speak about exceptions. No, okay, on a single day to a single person, you cannot pay more than 10,000 otherwise than the prescribed modes. However, in the case of a resident transport operator, the limit is 35,000 instead of 10,000. However, so whenever the law uses the word however, they are going to talk about exceptions. We are going to see those things also completely. Okay, so provisions and other things. Now, sometimes external aid, wherever internal aid is not possible, external aid, the best is finance minister's speech, provided it is understandable. Okay, right? Finance minister's speech will tell why they are bringing in a particular provision, why they are making a particular change. Okay, wherever the law has not defined a term, we take the dictionary meaning of that term, and sometimes other statutes stand as the best external aid. When I talk about other statutes standing as a best external aid, okay, sale, till today we all refer to Sale of Goods Act. Contract, till today we all refer to contract law. Like that, other statutes can also become the one of the best aids. So there is an internal aid, there is an external aid, which we will study. When we read a particular provision, I will tell you whether we are internally, 90% we will internally pick. And sometimes finance minister's speech, all these things, we are going to see those things. A quick look at rules of interpretation. A quick look at what are all the various rules of interpretation. We call it as, the first one as literal construction. Literal construction. What is this? When you read and understand, leave it as it is. Don't try to interpret it. If a language is clear and unambiguous, don't try to interpret it, my dear friends. Just because I want to interpret it, don't try to interpret. When you read it and you are clear about it, don't try to interpret it. When tax has to be deducted at source, anybody? When tax has to be deducted at source, can you tell me?
Sir, Saurav here.
Yes,
It
okay,
has to be deducted either when you are creating a provision in your books or when you are recording the expense, whichever is earlier.
Super. Either at the time of payment or at the time of credit, whichever is earlier. You are paying advance, deduct tax and pay. On 31st March, you are creating an audit fees provision. Audit fees account debit to TDS payable to outstanding audit fees. The outstanding audit fees is a representative personal account. For example, to Saurav. So audit fees to TDS to Saurav. So here I am not making the payment. I am crediting the payment in the name of Saurav. So the law says tax has to be deducted either at the time of payment or at the time of credit. So you, by passing this entry, I have deducted the tax. Even though payment has not been made, I will remit the tax in the next month. Okay, has to be sorry, either at the time of payment or at the time of credit, whichever is earlier, whichever comes first. This is the way you put entry in your books, right, Saurav?
Yes, sir.
Yeah.
Yes.
That is, whatever expenses it is, you will credit tax, you will credit the representative personal account. Am I correct?
Yes, sir.
For bonus, are you following this?
No, sir. I mean, salary payments generally year end only. There's one entry which is past the end, March month or something like that, where the entire amount of TDS for all the 4 quarters are recorded at one shot, sir. Generally, in practice,
Okay, okay.
so not.
I will take it as an answer outside the books. It is not correct. You are supposed to pass every month. Okay, office ரகசியம்லாம் வெளில சொல்லாத. Okay, right? Okay, that is different. But I'm asking you something, Saurav. Bonus for the year ended 31st March 2020. You are paying it in the month of August or September to the employees. But the entry is passed in the month of March 2020 itself. For anyone, this question is, are you passing the entry bonus account debit to TDS to bonus payable? Just try to recollect whatever you have been doing in the office in the correct manner alone. Recollect. Enna Anjana, are you passing the entry like that, Anjana?
Listen, I'm not sure. I didn't.
Okay, no problem. No problem. Preeti, are you passing the entry like that, Preeti? Or if Sailaja is there, can you tell me, are you passing an entry like that?
I think no, sir. We don't pass the entry.
Huh?
We don't pass this entry. We don't pass the entry.
Oh, then what entry you pass?
Sir, as Zauro said, we take it to the end. In the end.
Yeah, it's March 31st, sir. It is March 31st, you are creating a bonus entry. Not an issue. Not an issue. Manasa, are you awake now?
I think it's what's the content? TDS to salary.
Once more, can you repeat? You are hitting a tax.
A bonus account debit to TDS to salary.
No, I'm not taking that. Okay, are you passing? I don't think you're passing that entry. Okay, let me come to what I was trying to make you understand. For salaries alone, that word or credit is not there. Salaries, tax has to be section 192. All things which are falling under 194 has the provision either on due or on payment. Okay, either at the time of payment or at the time of credit, whichever is earlier. All things 194. Contract payment, professional payment, rent, interest, dividend. This year dividend also. But section 192 says only on payment. 192 is an exception where the law has not used the word either on credit or on payment, whichever is earlier. It is only on payment. That is why you will pass the entry bonus to bonus payable. You will not pass the entry bonus to TDS to bonus payable. You will deduct tax only in the subsequent year when you are paying it. Even if you are looking at, if you are an employee later, or even as an employer, form 16, when you give, you will not include the current year bonus. That is current year provision you will not include. You will only include whatever is the bonus paid, which will be the previous year provision paid during the year. Okay, always. Why I am telling you is salary alone, the law says it should be on the basis of payment. Section 192 is only when on the basis of payment and not on the basis of credit. In one of the cases, the assessing officer disallowed this bonus, my dear friends. In one of the cases, the assessing officer disallowed this bonus, saying you have not deducted tax at source. The company, the assessee contended, boss, your law says for salary, I need to deduct tax only when I am making the payment. Assessing officer said, No, it should not be interpreted so. When all other sections are saying either on the basis of credit or on the basis of payment, whichever is earlier, in this section also you should infer it so. You should infer it. You cannot understand it like that. You should also, in this section also, it is applicable. Literal construction. Court said, when the law is clear, why are you interpreting? Law is clear, sir. Law is clear that you have to pay it only when it is due. When you have to deduct it only when the payment is made. You have to deduct it only when the payment is made. Okay? Held by the High Court that there is nothing to disallow as salary payment is not hit by the provision of credit to be made. Literal construction. When you read the law and understand, that it is only on the basis of payment, assessing officer contending, no. It is not only on the basis of payment, it is also on the basis of credit. That word credit is missing. It should be inferred. It's not at all correct. Okay? Assessing officer was saying the whole of section 194 obligates the assessee to deduct tax at the time of payment or credit, whichever is earlier. So AO denied deduction as assessee has not deducted tax on bonus provision made. Held by High Court that there is nothing to disallow. A salary is not covered by that provision. It is very clearly mentioned, okay, that it is only at the time of payment for section 192 alone. Only at the time of payment you need to deduct tax at source. When the section is clear, you interpreting it otherwise is not acceptable. Literal construction. What is literal construction? Sir, when you plainly read something and you can understand that for the sake of it, don't interpret it. It is unfair. It is unfair to interpret it for the sake of it. Okay? So, literal construction. Okay? This is one of the ideal example. This case is ideal example of literal construction. When we do more cases in assessment also, I will come and show you what is literal construction means or how it is interpreted in the law. Okay, friends, these are more to do with the law. So we are not going by all these terminologies. Two things. One is this is questioned in law, and second, in income tax, the subject is so vast they will not find time to question these things. Only as a case law they can question you, because as such itself, I always feel that we are unfairly being treated in income tax by the CA Institute. Okay, 30 marks goes for international taxation. Remaining 70 marks for a very vast area, not at all sufficient. At Inter also, I feel income tax should be a standalone paper, 100-mark paper. Okay, there also 60 marks only. So there are a lot of questions, areas to test for them. These are areas that will be tested mostly in law. We are just trying to understand. Okay. We all know this rule very clearly. What was the law before? What is the present amendment? And what is the lawmakers' intention of avoiding? What they want to rectify? This is why I said marginal notes are essential. When you read in the future, if you read the marginal notes, you will understand what is the necessity of making the present amendment. What is the necessity of making a present amendment? Okay, this is rule of mischief. What was the law before amendment? What is the mischief or defect for which the earlier provision did not find the remedy? What is the remedy that the parliament has given in this particular? Rule of mischief is evolution of law, evolution of a provision. Rule of mischief is evolution of a provision. What was it before? What was the need for this amendment? Post amendment, how it is. Post amendment, how it is. What is the other name for rule of mischief? What is the other name for rule of mischief? Anybody? நீ சொல்லலைன்னா
Sir, Hayden rule. Sir, Hayden's rule.
Hayden's rule, beautiful. Hayden's law, this entire thing. So it is also known as Hayden's law. If you want, you can write it and keep. It is also known as Hayden's law. Okay, harmonious construction. The entire law has to be studied as a whole, giving effect to all the provisions of the law. 44AB, now as soon as now the dates are being changed, due date for audit being different, due date for this being different, filing being different, harmonious construction is more relevant. You have to give both the provision. Audit due date is 30th September. Due date of filing return is 31st October. So both these provision has to be given effect to. Harmonious construction. Beneficial. This is the rule which you will follow in all your assumption cases. In exam, there are a lot of assumptions also we make. What we have to follow, what our CA Institute expect us is that which is most beneficial to the assessee. That which is beneficial construction is not for the department, it is only for the assessee. Beneficial construction is not for the lawmakers, it is only for the assessee. One of the excellent interpretation of beneficial construction. Beneficial and harmonious. I will tell you, please listen. For all assets before purchased on, for all assets purchased before 1/4/2001, fair market value as on 1/4/2001 can be adopted as cost of acquisition. Repeating, for all assets acquired before 1/4/2001, FMV as on 1/4/2001 can be taken as cost of acquisition. This is one provision. Another provision says cost of bonus shares. Cost of acquisition of bonus shares is nil. Beneficial construction. If the bonus shares are allotted before 1/4/2001, if the bonus shares are allotted before 1/4/2001, the law says for all shares, for all assets before 1/4/2001, this becomes my property before 1/4/2001. FAB as on 1/4/2001 can be considered. Now I can consider beneficial construction, that which benefits the assessee. That which benefits the assessee will only stand. Beneficial construction. Ejustim generis, etc. Okay. General words will take the character of preceding words. Repeat. General words, lion, tiger, elephant, and other animals. General words will take the character of preceding words. Ejustim generis. We are going to at length discuss this section later, but now. According to section 2, subsection 22, clause E, deemed dividend. Okay, according to, my dear friends, according to section 2, subsection 22, clause E, deemed dividend. Any loan or advance given to what is this advance? Ejustim generis. This word advance, okay, is given an ejustim generis treatment. Advance in the nature of loan. Advance in the nature of loan. Sir, me and my subsidiary company, that is holding company and subsidiary company, has regular transactions. Holding company and subsidiary company has regular transactions. I buy goods from subsidiary company or holding company, vice versa. So for purchase of goods, I paid some advance. For purchase of goods, I paid some advance. Is it coming under 222E means? No. It is not covered under 222E because that advance is not in the nature of loan. Any loan or advance. The terminology advance, the law says, is ejustim generis clause. Advance, so general word which takes the character of preceding word. Advance in the nature of loan will only be covered in this. There is a very famous case law. Again, as I told you, I will come to that. Ambassador Tours and Travels. Sir, I am a tour operator, sir. I am a tour operator. So, 20 days tour to India, 17 days tour to Europe. Like that. I am a tour operator in India. 25 days tour to India, the various part of India. I have a scheme by attracting all the foreigners. The foreigners pay to me. In turn, I have to book hotels, travel arrangement for them, everything. So I have some subsidiary companies which are running hotel, which are running cab facility or travel facility, etc. I have a subsidiary company. So I get advance of some 40 people coming to India. So I book them. So I pay advance. The lawmakers, the assessing officer, tax the advance as deemed dividend. You have paid a loan to a subsidiary company. The subsidiary company has received a loan from you, or the holding company has received loan from you. The court held no. This is not. The payment made, which is advance, will not partake the character of loan. This is a trade advance. They are having regular transactions. So this is more in the nature of trade advance. So it cannot be treated as loan. So when they say any loan or advance, the word advance partake the character of loan. Advance in the nature of loan is only covered. That is the best example in the income tax law for the word ejusdem generis. Literal construction, Hayden's law, beneficial construction, and ejusdem generis. It's enough for the interpretation. You remember this. Of course, it is not going to be a direct question, but in an indirect case law question, suppose if there is a case law question comes, suppose let us take as a case law, they ask the ambassador tours and travels question. Apart from writing the judgment, if we can value add our answer by writing the principle of ejusdem generis, will not take more time. But one line extra. This is coming under ejusdem generis. Our paper will stand tall. Provided the examiner also understands it. Okay. Some words are of importance. Only one word. This I am going to discuss in assessment procedure. You will see a stunning case law of the words. You will wonder, sir, and an or case law. Yeah, it is there. There is a case law. Okay, right? And the one thing which we need to understand is deemed. What is deemed? Supposed to be. Deemed owner, supposed to be owner. Deemed income under PGBB, supposed to be an business income. The word deemed means supposed to be. We all know the usage of shall and may. Shall is mandatory. Wherever law is used, shall file the return, mandatory. May file the return, optional. Shall is mandatory. May is optional. I'm going to the next phase of understanding some terms and terminologies. Just give me a minute. I failed to bring water. I'll just bring water. Just give me a minute. Let us go and understand some of the terms. Okay. I also give you some other inputs about the classes. That is, in this 4 hours of classes 6 to 10, we'll have a 10 or 15-minute break. Maximum will be 15, but I would be happy if it is 10. Okay, just to ensure that you relax a bit and have your cup of coffee. Okay, and in the evening also, you will have a 15 minutes, definitely a 15 minutes break, so that you can plan well ahead that your dinner time. The break will be somewhere between 7:30 to 8:30 any time. and it will be for a 15-minute break in the evening also, my dear friends. This is one thing. Okay. For the people who are very, very known to me, that is for those who have done inter with me or those who little know about me. Okay, for all the new people who are there in the classroom who are first time interacting with me, okay, this person who is sharing his little knowledge on direct taxes is a die-hard fan of Talevar. Okay, so you will always find in the material lot of questions on Rajnikant. Okay, so you will enjoy those questions as much as I enjoy. There are four things. Tax is a very big passion for me. Very, very big passion for me. Tax, I don't see it as a subject, it's a passion. So I'm going to convert that passion into yours also as we go through the provisions and understand it. Okay. Theater, I'm a dramatist. Theater is a passion for me. Talevar is a passion for me, and coffee is a passion for me. So all these things, that's why these sessions are known as direct taxation with Coffee and Watson. Okay, right. Let us continue our discussion. Okay. The study of income tax law is divided into four heads. First is Income Tax Act 1961. Income Tax Act 1961. Okay, my dear friend, okay, just see. One thing is, if you want the class to be live, be dynamic also in our interaction. Okay, my dear friend Ramya, you were telling me that you have seen the act. Can you unmute yourself, Ramya, for a minute?
Hello?
Yeah, Ramya.
Yes, sir.
Yeah, Ramya, nee act paathirukke. You have seen the act. That's what you said. Can you tell me how many sections are there, Ramya?
Ah,
It's okay. It's okay. Yeah, we won't see the last page. I also understand. Okay, no issues, Ramya. Okay.
sorry, sir.
No. Please don't. Please don't. Okay. I'm just calling you as a representative. Remember, all the others will also feel the same way. Chai, the path, I should have verified that. Okay. That's not a problem, Ramya. But I want to know how many chapters cover income. The entire law is divided into chapter. Okay. Everything is a chapter. Okay. So that is where how easily we can refer to. So how many chapters cover income?
5.
5. Okay. Any other answer, friends? Inada Vishal.
6, sir. Maybe
6.
international taxation is also included.
Okay, Vishal. I open the window and call Vishal. Okay. Right?
Okay, sir.
5. That's the answer I was also looking at. But please understand, income is only one chapter.
Oh.
5 heads is different from 5 chapters. Only one. I'll tell you, Ramya, how it is. What is deduction? Deduction under chapter 80C to 80U. Deduction under chapter
Chapter 5.
Chapter 6A.
6A.
Deduction is under chapter 6A. Now, okay, mute yourself, Ramya. Deduction is chapter 6A, friends. If deduction is chapter 6A, before that 5 heads. But what are all the things you are? You have introduction, that is definitions. You have residential status. You have scope of total income. You have exemptions, which is section 10. You have the incomes. You have clubbing. You have set off. Then only deduction comes. If deduction is chapter 6A, if deduction, then how can income be 5 chapters when you have, remember, a chapter is culmination of same things. I'm taking this time to understand, to make you understand one important thing. A chapter is culmination of same things. All the 5 heads of income are in only one chapter, chapter 4 of income tax law. Chapter 4 is the only chapter from which you are going to get some 40 marks. Only 5 heads of income. Please, our friend Vishal was saying international taxation is how to tax this particular income, what are all the rates. If you ask me heads, only 5 heads. You all know the 5 heads by heart. Okay, only 5 heads of income, and all the 5 heads of income is falling under only one chapter, chapter 4. Then only chapter 5 clubbing, chapter 6 set off, chapter 6a deduction. Chapter means culmination of same things. Why I am again and again telling you this is, sometimes the chapter will have only one section, sometimes the chapter will have 40 sections. Income is an example. Section 15 it starts. Section 14 we all know, deduction not allowed. When the exemption, when the income is exempt, expenses cannot be allowed. Okay, you are all working in your office about that exemption. Denominator by number of investment, that year that is over, no more that is valid. 15 to 57, 58 up to this income. More than 40 sections is one chapter. Sometimes only one section will fall under one chapter. Section 115U, a unique way of taxation. Only one section will be there. That will be a chapter, because there is no related thing to fall under this chapter. Chapter is a bucket. Chapter is a pot of milk, pot of other liquids. You cannot mix it. So chapter means, okay, a certain, that's why chapter heading will be there. Income is a chapter heading. My dear friends, Income Tax Act has 298 sections. 298 sections which are divided as of today before the present budget into 37 chapters. And subdivided into heads, that is what you are seeing. Chapter 4 is income, which is subdivided into 5 heads. Which is subdivided into 5 heads. Sometimes the sections are supported by schedules. In Income Tax Act, we have 14 schedules. So, income tax law is divided into 298 sections. Which is predominantly computation of income, computation of liabilities, procedures of assessment, TDS. We will study patiently. Here I want to have a small add-on to you. What is a charging section? What is a charging section? We all know normal rates are specified in Finance Act and not Income Tax Act. Up to 250 nil, 250 to 5 lakh 5%, 5 lakh to 10 lakh. These are part of Finance Act and not income tax law. Part 1, Part 2, Part 3, Part 4 of Finance Act. Part 1 and Part 4. Okay, rates for various assessees, aggregation of agricultural income. These are part of Finance Act, my dear friends, normal rates. Special rates are part of IT law. Section 112 LTCG is taxable at 20%, part of income tax law. 111A STCG on which STT is paid is taxable at 15%. Taxable is part of income tax law. Where rate is part of a section, that becomes a charging section. Once more, where rate is specified in the section itself, where rate of tax is specified in the section itself, that becomes a charging section. Whole of 115 is a charging section. Whole of 115 is a charging section. Whole of section 115, my dear friends, is a charging section. Any section, 115 JB, which is very popular for you. MAT, 15% of book profits. 115 JC, alternative minimum tax, 18.5% of adjusted total income. Till last year, 115 O, dividend distribution tax. From today, for the rest of your life, unless the law changes, unless the new one. If somebody tells you 115, close your eyes and say you are talking about a charging section. 115B, BB, winnings taxable at 30%. 115A, non-residents rate of special rates of taxation. If somebody tells you 115, in the rest of the classes, whenever I am going to tell 115, you can bounce me back and say, sir, you are going to talk about the charging section. Because the rate is going to be inherent in the section. The rate is going to be inherent in the section, the rate of taxation. Charging section is very, very popular. And 112, 112A, 111A. Apart from these three things, all the charging section are put in a basket called 115. When I start with assessment, the part 2 of our discussion, assessment of entities, from there on, it is full of 115, 115, 115. And everything is a charging section. 115 BBC, anonymous donation received by a trust, charging section, charged at 30%. So, where rates are inherent, it is a charging section. Otherwise, wherever I am referred to Finance Act, sometimes section 4, tax at the rate specified in Finance Act. Here rate is not inherent, but I am saying, boss, refer that charging section. Charging section. Charging section is very important because that is the section which brings me revenue. That is the section for which this law exists. So charging sections are very inherent. So Income Tax Act will have lot of charging sections. We will see that. We will see, and everything is basketed in 115. Everything is basketed. At one particular class, once we get this practice, whenever I am writing, my dear friends, according to section 115, your mind will start processing. Sir is going to talk about a charging section. Okay. So Income Tax Act, followed by that is known as subordinate legislations. Initial law, I'll give you a preamble for this, which today you will laugh, but initially lawmakers said, why subordinate legislation becomes important? If something is mentioned in the act, if you want to amend it, Parliament should be in session. Something is mentioned in the act, if you want to amend it, Parliament should be in session. One example we will take. Suppose if forms, income tax filing forms are part of act, assume that it is part of a schedule in the act. Name of the assessee followed by that 25 boxes are there. I want to make 25 boxes into 30 boxes. I want to add 5 more boxes. Parliament has to be in session. Certificate of auditors. I want to make some other details in the certificate, like the what is newly known as the auditor's number and auditor's registration requirement, etc. I want to bring it in the certificate. Parliament should be in session. In the initial days when law was starting to evolve, they said Parliament time is precious. Those days. Parliament time is precious. It should not be wasted on trivial issues. It should not be wasted on trivial issues. Those small formalities, give it to an organization, give it to a body which will do. So came subordinate legislation. And so came this entity, so came this board called Central Board of Direct Taxes. Parliament time is precious. For small issue, don't waste Parliament time. So give it to a board which is controlled by the government, that is Central Board of Direct Taxes. So came income tax rule. Under section 295, it is being empowered to CBDT to make rules. Rules are just the procedural aspect of law. Rules are procedural nature of law. I have told you, I am again repeating to you. So for people who are there in my intro classroom, generally I say the relationship between rule and act is similar to that of articles of association and memorandum of association. Memorandum will give you the broader picture. Articles will provide the bylaws. Act will give you the broader picture. To claim exemption under section 11, to claim exemption, some of the exemptions under section 10, obtain an auditor's certificate. What should be the content of the subject certificate? That will not be said in law. It will be said in rules. Whether we are following that content, that is different question. We'll answer it later. Okay. So, under section 80D, 80DD, 80DDB, treatment for specified diseases. I get a deduction of 75,000, 1 lakh, depending upon the person treated. It should be certified by a medical practitioner, doctor. That is, to claim the deduction, I should obtain a certificate from the doctor and provide it to my employer or the assessing officer when they ask for. What should be the content of that? It is a printed form. Should be signed by the doctor. Subordinate legislation. Subordinate legislation, which is like income tax rules, which are part of, which is given to the power given to CBDT, which is the power given to Central Board of Direct Taxes, who can also release circulars, who can also release notification. Circulars are released only for income tax department, not for general public. But if the CBDT issues notification, it is applicable for department as well as you and me. Repeating, circulars or internal documents. Okay, these are binding only by income tax authority, not even an appellate authority. It will not bind the assessee at all. It will not bind the assessee, whereas assessee can claim the benefit or insist upon the benefit being. A circular is there, income tax officer is not following that circular. I can go and tell the income tax officer, boss, a circular is there, follow it. It is applicable to me. Okay, this is circular. Whereas notification is of general nature. It is applicable to all. About judicial pronouncement, I will speak in appeals. About judicial pronouncement, I will speak in appeals. One thing you have to remember, a judgment by Supreme Court will be treated as if it is law. A judgment by Supreme Court is as if something is written in law. Every one of us are supposed to abide by the Supreme Court judgment. Be it the lawmaker or anybody, Supreme Court judgment is something which is written by law. So we are going to study the income tax law using Act, rules, circulars, notification and decisions. Majority of the circulars are covered in the annexure given to you. Okay. Majority of the circulars and notifications are covered in the annexure. Don't worry. Whatever is the relevant circular, we will do it. For the general rate, section 4 is the charging section. Okay. Section 4 is the charging section. And tax liability is on every person. Tax liability is on every person. The first definition is person. To a larger extent, you know this. To a larger extent, you know this. I'm not going into the details because we are going to see all these assessments. Individuals, Hindu undivided family, we will see the assessment. Company, firm, AOP, BOI, government organizations and trust, cooperative societies, various other artificial people. Individuals, HUF, company, firm, AOP, BOI, okay, local authority, artificial, everything we are going to see. Everything we are going to see as assessment. There I will explain you small nitty-gritties if at all anything. But person, don't worry about it. But there is something to understand more efficiently, which is known as who is an assessee. Who is an assessee? This is my discussion now. Okay. My discussion is now on who is an assessee. Assessee means a person from whom any tax or any other sum of money is payable under this act. Assessee means tax is due from him or any other sum of money is due from him. அது என்னது? What does that tax due? Okay. What is any other sum under this act which will be due from a person? Example, please.
Penalty.
That's good. Because if you have said interest, I would have said no. Interest is directly, okay. Penalty. Any other example, please? Not an issue. Not an issue. Your total income, you are an individual. Let us take your carrying on business for a minute. You are an individual. For a minute, I assume that you are carrying on business. Your total income is 2,40,000. Are you an assessee? Are you an assessee? You are an individual. You are carrying on business. Your total income is 2,40,000. Are you an assessee?
Yes, sir.
Saurav, right?
Yes, sir.
How, Saurav, you are an assessee?
Sir, I mean, whether my tax liability may be zero because of the prevailing finance act, sir, but if there is income, then you have to pay tax.
No. Assessee means any person by whom any tax. Saurav, you are receiving your stipend. Are you filing your returns, Saurav?
Yes, sir. I'm filing my returns, sir.
For your stipend, I mean, if stipend is your only income.
Okay. Yes, okay, sir. I mean, exempt income also.
Which we all believe in the classroom, which will not exceed 2,50,000. Suppose
correct,
it exceeds, sir, please give your auditor's address to everyone. You put it in the group, we'll all join. Okay, but no, leaving that apart, if for an article, if stipend is the only income, are you an assessee?
I think yes, sir. I'm not sure, but I believe yes, sir. I mean, even exempt income.
Let me define you, Saurav. Assessee means from whom any tax or any other sum is due, is payable. Stipend, I believe, will not exceed 20,000. Even if it is 25,000, it is going to be 3 lakh with its own standard deduction and all. It is not going to be more than 250. More than 250, if the income is not there, for an individual, no tax arises. Assessee means any tax. First part of the definition. Any tax or any other sum of money is payable. So is he an assessee?
No.
No. Louder, please.
No, sir.
What's your name?
Antonio.
Antonio. So you are right. Because income is 2,40,000, Antonio. That income for which you are not liable to pay tax, you are right. Assessee means any tax is. You are a businessman, Antonio. I still hold the same example. And your income is 2,40,000. You are not an assessee. Are you clear?
Yes.
Suppose, Antonio, you have made a payment to a professional on whom, on that payment, you have deducted tax and you have not remitted it to the government. You have paid me some money on which you have deducted tax, but you have not remitted it to the government account. Now you become an assessee.
As any sum payable under the tax.
Any other sum. One of our friends said, sir, penalty. Yes. Another way of interpreting it, any other sum of money payable under this act. Sir, you have deducted tax, sir. For your income, you are not liable to pay income tax. Normally, you are not an assessee, but you are liable to pay the tax that is deducted at source, but not deducted. Assessee means take your own time. If you understand this term, you're going to understand law in a great manner. To whom any tax is due, from whom any tax is due, or any other sum, TDS. One of our friends said, sir, I sent a notice not asking you to pay tax, for getting some information from you. You are not responding to that notice, so I put a penalty. Now you are an assessee. Any other sum of money payable under this act. Any other sum of money payable under this act. Assessee means from whom any tax is due or any other sum of money is due. And includes, it's an inclusive definition. Look at this. Every person against whom proceedings is taken under this act. In the later, you are going to understand what is proceeding. If I send you notice, there is a proceeding against you and you become assessee. Look at this wording. Every person in respect of whom any proceeding under this act has been taken for the assessment of his income or the income of any other person in respect of which he is assessable. His income or the income of any other person for whom I am assessable. Enna Sudhir, what is the law talking here?
Assessee, sir.
Louder. Income of any other person in respect of which I am assessable.
Sir, is it clubbing of income, sir? Sorry to interrupt. Is it clubbing of
no
income,
problem.
sir?
I want somebody to answer. Yeah. Yes. I want this answer to clarify. I want to break this clubbing. This is not clubbing. This is popularly known as representative assessee. Clubbing is only his income.
Okay.
Here, the law speaks about, which is going to be one of the most important chapters in the future, representative assessee. A firm is not paying tax, sir. A firm dissolved without paying tax. Partners are jointly and severally liable. Income of any other person, firm, of which I am assessable as a partner. Agent of a non-resident. One of the most difficult but interesting part of law comes in 160. What are all the duties of legal heir? When the legal heir is responsible to file returns in respect of any other person of which I am assessable is an assessee. Write and keep, any loss is an assessee. All people who have lost returns are assessees. If you have refund, you are an assessee. So if you ask me who is an assessee, I will say everyone. If you have income exceeding basic exemption limit, or if you are liable for tax, assessee. If you are not liable for tax, but you are liable for TDS, penalty, assessee. If you get a notice, you are an assessee. If you have loss, you are an assessee. If you have refund, you are an assessee. If you don't have anything, but for some other person you are responsible, you are an assessee. So terminology assessee is huge. The terminology of assessee is broken down into part: tax due, any amount due, proceeding spending, okay, losses, refund, another person's responsibility falls on you. In all these cases, you are an assessee, my dear friends. In all these, so the terminology assessee is huge, covers almost everyone. It also covers deemed assessees, which we will study, and also assessee in default. One who is not complying with the provisions is known as assessee in default. You are supposed to pay TDS within the due date. If you have not paid within the due date, assessee in default. If you have not filed your return within the due date, assessee in default. So assessee is in default is a derived term, not a new term. Okay, so assessee in default. All these persons are regarded as assessees. All these people are regarded as assessees, and they are liable under this law. And they are liable under this particular law. Am I clear to you? Okay. So assessee is a huge term under tax law. Let's take a 10-minute break. I'll be back. If you have a question, you can ask.
Hello.
Yeah, I'm listening.
Sir, any other sum that is payable, why is interest not included?
Why is interest not included is because interest is normally computed on tax amount. When tax is due, interest is due.
Oh, okay.
Yeah. Maximum 10 minutes, friends. Maximum 10 minutes, we are back. We start back, friends. So, one of the most important, interesting definition is assessee, and these are all the various aspects. I'll speak about assessment. I'll speak about assessment and income. We are all going to speak about income continuously. I'm not going to talk about income definition now. I know when to take care of income definition. The GST and the customs law will specify you what is the term India means. It includes territorial water, continental shelf, etc. Here, this definition gets importance to determine residential status, okay, and to claim some of the economic related benefits, okay. The term manufacture is not getting greater importance because some deductions are available only for manufacture. It is important only for some manufacture, okay. There was a previous excise law which will only which define the whole term of manufacture. There should be a change, that is between the raw material and the finished product. It should be new and distinct product should emerge, okay, having a different name and characteristic, okay. Not a direct question, but why I define manufacture here is to make you understand that various places the word manufacture, the benefit are going to be available only for manufacture. So for that purpose, I want to make it clear to you. That is why I picked it up here. Friends, before entering the core area, Two other things I want you to understand. One, which came from 2019, Finance Act 2019, but the notification only came very much later. Two, the Finance Act 2020 amendment. Two things I want you to understand. First, I want you to understand what is meant by cash and what is meant by otherwise than by cash. Because the notification came now and now we have to make it. What are all the areas which are going to cover? There are 20 different sections which are going to cover this. Starting from section 32, 35, 40A3, Capital Gains Chapter 50C, IFOS 56, 80G donations, 80G, GG, GGA, GGB, GGC, 80JJA. Everywhere they are going to see payment otherwise than by what? Now we will unifiedly define here. Whenever we study there, we are very clear about it. Every section we need not study this. Let us unify it in one particular place. That's why I am giving it as part of introduction itself. In various provisions, the law is going to use payment should not be made otherwise than by account payee check, account payee draft, or other approved mode. What is that approved mode? And what is this account payee check, account payee draft? Let us understand. This, as I told you, it is only, though it is announced in Finance Act 2019, notification only came in 2020. What is approved mode? What are all now approved? Account payee check accepted. Account payee draft accepted. ECS accepted, electronic clearing system. And then comes, believe me, only from 1920 this is applicable. 16, 17, 15, 16, you have made by these modes, it is not an approved mode. Interpretation can win the case, but it is not an approved mode. Credit card, debit card, net banking, NEFT, RTGS, these are only from 1920. IMPS, UPI, rupee, all these cards, DMAT, all these things only from 1920. So these are all known as approved payment system. Acceptable modes of payment. In short, let us come to our language. Expenses will be allowed if you do in these modes. Deduction will be allowed if you do in these modes. Account payee check, account payee draft, ECS, RTGS, NEFT, credit card, debit card, net banking, IMPS, UPI, BMAP, RuPay will be allowed only if you do in this system. What is important is what is not allowed. There I want you to understand something. Cross the check and account payee check are not the same. If the law uses the word account payee check, please understand, cross the check and account payee, Supreme Court has clarified, cross the check and account payee check are not the same. till the Supreme Court clarification came, I was also thinking cross the check and account payee check are the same, because I also failed to note that point in Negotiable Instrument Act. I also left it in choice when I am doing my inter. Later only when Supreme Court clarified. What is the clarification? Just for your understanding. Cross the check is negotiable, is transferable, endorsable to another person. If I give you a cross the check, you can endorse it to another person. But if I give you an account pay check, only you can encash. You cannot endorse it. This is the difference between account pay check and cross the check. Now understand, non-acceptable modes are, so far you practically what you would think, cash and bearer check. No. Even cross the check is a non-acceptable. So in our language, if payment is made by cash, bearer check or cross the check in excess of the specified amount, expenses will not be allowed as deduction. Expenses will not be allowed as deduction. One of the main thing of 2019 Finance Act, which explains what is so. Many people who are looking at amendment of 2019, the amendment went for 45 pages. Many people thought so many amendments were there. No, in every section they have to introduce this. They had to introduce this in every section. Not only just 48.3, 32, 35, like that, 80, G80. So many sections. So every section they have to introduce. Now what I thought is, we will define it in the front itself. Now you are very clear what is acceptable mode, non-acceptable. Now when I go to section 56 even and say, what is the date of stamp value I should take? If it is acceptable mode of payment, if it is non-acceptable mode of payment, you will know what it is. You will now know what it is. That's why I thought I can bring it as an introduction itself. What is acceptable mode of payment? That you can, if you are finding it difficult to remember all these things, what is not accepted? 3 things. The third thing is something new to you. Cash check, bearer check, you all know by practice, and from Intel you have cross the check is also a non-acceptable mode of payment. Now you will immediately relate back to your office and see, why are you giving such a comment in your form 3CD? We are not aware. I don't know this client itself. He is someone away from me. I don't know what method he paid. Okay, because we don't know whether the payment is cross the check or account pay check. So we want to protect ourselves. In the name of protecting the way we use terms, the room of chart accountants, we can be honest. Okay, right? One of my friend used to say, the biggest oxymoron is honest chart accountant. Okay, right? Change in due date, which also I want you to understand at the introduction itself. Now the audit date is 30th September. Due date of filing is 31st October. This is going to be a little problematic. Hopefully they merge it either way very soon. But the audit
Hello,
due
sir.
date.
Sir, I'm sorry for interrupting, but the screen is stuck for me. I want to know, is there any problem at my end?
Friends, is it stuck for everyone?
No, sir.
Sir, I found an issue. Like if I use the chat box in this screen, it gets stuck. So like I think you can avoid that.
Okay.
Try leaving and coming in again, and like avoid using the chat box.
Yeah. Can you try it, my dear friend? I'll just wait. Can you leave?
Yeah. Yes.
Yeah, I'll wait. You can leave and come back. Have you joined back?
Yes, sir, I have connected, sir.
Yeah, thank you. Right. So due dates are now little different because when we are going to discuss, sometimes the law uses the term 1 month before the due date of filing return. Payment has to be made 1 month before the due date of filing returns because 31st October and 30th September. Auditor has to certify, sir, 43B, sir, statutory payments. As an auditor, you are supposed to certify whether payment has been made. Before the due date of filing return, now what will the client say? You certify, I will pay next month. So wherever such a complication will take place, the law has been amended 1 month before the due date. So that's why this is also important for our progress. Okay. So two things in the introduction itself I want to discuss is one, what are all accepted modes of payment, and second, what is the due date of filing returns. Okay. Okay. With this small introduction, there are huge introductions which are pending, which will be chapter wise, section wise, the introduction. Okay. Before stepping into PGBP chapter, because I'm also going to do in some questions the taxation working also. The tax working, in some questions we are going to do it. It is not that we are going to study the income, later the tax and later computation. In our tax, when we go to firm, it's a single rate. When we go to companies, along with the special provisions, it is a single rate or special provisions of 115 BAB, BS, BAA. We'll see those things. But for individuals, I want to work out some of the questions and show you the tax workings for two reasons. One, that will facilitate you to go forward, and when we go to chapters PGBP, some questions I'm going to work out the tax also in the case of individuals. You should be clear. That is smaller objective. But the greater objective is, from the first class, I want you to be clear about this surcharge. Today, remembering tax is not a greater difficulty, tax rate. Today, remembering surcharge itself is a very greater difficulty. I go into the first aspects, okay, of, we'll come back to mutual concern. I know where to come back to that, of rates of taxation. Whatever I'm skipping, I know where I'm going to take it. It's my duty, don't worry. First, I'm going to talk about rates of taxation. Okay, and I'm only concentrating, okay, because I'm not covering the optional tax regime that I will cover respective for companies, for individuals 115 BAC, for cooperative societies 115 BAD. It's a self confession by the ministry. It is not a good law, so they said 115 BAD. Okay, and we are not covering that here. We are covering only the normal aspects. In that also, my focus is to make you clear with regard to this surcharge, to make you clear and comfortable with regard to surcharge. That is where I am going to focus upon. Friends, tax rates, understand as of now for individuals, though when I am teaching you AOP, BOI, trust and all, I am going to say, why I am telling is, because in colloquial terminology, if you ask me, sir, what is the rate for trust? I will say, colloquially, individual rate. Actually, it is not individual rate. It is popularly known as slab rates. My answer should technically be slab rates of taxation is only applicable for trust also. Slab rates of taxation is only applicable for, in some cases, for AOP, BOI also. But we call it as individual's rate. Communication. Once you are understanding what you are asking and I am communicating what you are asking, their communication gets completed. So, but actually these are known as slab rates. For an individual, basic exemption limit is 250, 3 lakh, 5 lakh. Basic exemption limit 2.50, 2 lakh 50,000. 3 lakhs for senior citizen. 3 lakhs for resident senior citizen. 5 lakhs for resident super senior citizen. 60, 80. So all others, which means, understand, if suppose he is a non-resident who is a super senior citizen, for him also basic exemption limit is 250. I will repeat it again in international taxation. If he is a non-resident, but a super senior citizen, is the basic exemption limit 5 lakhs? No. This slab 2 and slab 3 is only for resident senior citizen, resident super senior citizen. And this is for individuals not covered under 2 and 3. The basic exemption limit is 2,50,000. Next to 250, 5%. Next to 5 lakhs, 20%. On the balance, 30%. From our practical understanding, we all know, okay, individuals, okay, up to rupees 10 lakhs. We call it as 1,12,500. Sometimes we call it as 1,10,000 for senior citizen. And for only 1 lakh for super senior citizen. Okay, for individuals, we gave this rate: senior citizen, super senior citizen, otherwise 1,12,000. So we all know up to 10 lakhs how much it is. More than 10 lakhs, everywhere it is 30%. Okay, so kindly, if you have not yet received the material, fine. Once you receive, or if you have received the material, I have failed to look into the word resident senior citizen. Okay, please add those words: resident senior citizen, resident super senior citizen. Okay. If you have received the material, please add those words. It is only resident senior citizen, resident super senior citizen. It is a resident senior citizen and only for a resident, because non-resident, I have included it in non-resident taxation, but here also let me make it clear. Okay, a resident super senior citizen. Okay. Now coming to the special rates of taxation, leave alone firm, companies and all. Let's go to the respective areas and see. Okay, friends, I want to write it and then strike it off. That's why I have kept it here. Okay, because you need to understand what is the amendment. STCG, this is 15%, my dear friends, stays. LTCG on which STT is paid, 112A. First 1 lakh is exempt, beyond 1 lakh it is 10%. First 1 lakh is exempt, beyond 1 lakh it is 10%. Other LTCG 20%, lottery winnings 30%. And please understand, this is where the first biggest amendment that took place this year. This is where the first biggest amendment that took place this year. That is, this dividend income is now fully taxable. It is not there in your material, it's okay. If this dividend income is fully taxable. So one of the biggest change that happened for your year is all type of dividend income is taxable in the hands of the recipient. Okay. So dividend income becomes fully taxable. Unexplained cash credit, I will come to it when I am doing search assessment and also IFOS. Surcharge. Please take your time. Let us go slow in this. Please mute yourself. Please mute yourself. Okay. Surcharge applicable. Now I am only focusing on individual. Total income exceeds 50 lakhs, less than 1 crore, 10% surcharge. Surcharge is computed on tax. It is computed on tax. Total income exceeding 50 lakhs, less than 1 crore, 10%. More than 1 crore, less than 2 crores, 15%. Up to this, very clear. Total income exceeding 50 lakhs, but less than 1 crore, 10%. More than 1 crore, but less than 2 crores, 15%. Up to this, pakka clear. Total income, remember, excluding STCG on which STT is paid and LTCG on which STT is paid. Once more, total income excluding STCG on which STT is paid and LTCG on which STT is paid exceeds 2 crores but less than 5 crores. Total income excluding STCG on which STT is paid and LTCG on which STT is paid exceeds 2 crores but less than 5 crores, two levels of surcharge. 25% on such a total income, that is excluding STCG. Whatever tax you are getting, on that 25% is the surcharge and 15% for, because you are already paying STT, I am not going to charge an extra surcharge on that. 15% on tax computed on STCG on which STT is paid and LTCG on which STT is paid. Repeating, where the total income other than STCG and LTCG, or both on which STT is paid, exceeds 2 crores but less than 5 crores. On that tax, 25% is the surcharge. For this tax, STCG 15%, LTCG on which STT is paid, first 1 lakh leave nil, on the balance 10%, on that tax 15%. More than 5 crores, 37%. More than 5 crores, 37%. Total income, including these things exceeding, it goes back to the previous rate of 15%. Repeating, the surcharge levels are little different. Normally 10%, 15%, but income exceeding 2 crores and 5 crores, 25%, 37%. Which income? Income excluding 111A and 112A. For those two things, always 15%. Read through this once. And if you have a doubt, ask me. HEC is 4%. Let's come to all other things later. HEC is 4%. Even rebate, I am going to come later only. I think rebate will change today. Okay, HEC 4%. Computation of taxes for individuals. I am only doing for individuals. Computation of taxes for individuals. I am in example number 1 of page number 18. I am in example number 1 of page number 18. STCG under section 111A 10 lakhs. LTCG under section 112, not 112A. 112 is other LTCG which are taxable at 20%. Other LTCG which are taxable at 20%. Business income 40 lakhs. Okay. Computation of total income. Business income is 40 lakhs. STCG on which STT is paid is 10 lakhs. Other LTCG, why I am writing other LTCG is, it is not LTCG on which STT is paid. That's why I am writing other LTCG, 5 lakhs. Okay. Total income. Okay. My dear friends, total income exceeds 50 lakhs, does not exceed 1 crore. Total income exceeds 50 lakhs, but does not exceed 1 crore. So surcharge is going to be 10%. Okay, now computation of tax. Particulars, income tax. Okay, business income which is taxable at slab rates, you can write normal rates also. Slab rates. Please understand my working. I hope you are all clear. 40 lakhs minus 10 lakhs into 30% plus 1,12,500. Repeating, 30 lakhs into 30%. On the first 10 lakhs, we are all very clear since they have not given senior citizen or super senior citizen. It is 112,500. So 30 lakhs into 30%, that is 9 lakhs plus the first 1,12,500. So it comes to 10,12,500. STCG on which STT is paid, section 111A, taxable at 15%, my dear friends, into 15%. Other LTCG, okay, section 112, taxable at 20%, so into 20%. Total tax, my dear friends, total tax comes to 12,62,500 and surcharge at the rate of 15%, sorry, 10%, surcharge at the rate of 10%, okay, and HEC at the rate of 4%, and HEC is computed on tax plus surcharge into 4%. Total tax payable is 14,44,300. 14,44,300. Fourteen lakh 44,300. Okay. One small caveat also before going for further workings, etc. Friends, I'm not very, what do you say, very fluent or very fast or very good in Excel keys and all. Okay. Unfortunately, the first base 5 years of my practice was without much of Excel keys. Okay, so that is imbibed in me. So my Excel working will not be as excellent as your working. You would always feel why he is taking so much time. He can do like this, that, etc. Because you know a lot of shortcuts, lot of keys in your office, your conditions and other things. I'm a very traditional Excel person. In fact, from the last batch only, I am a person who work. Otherwise, I am a person who dictate answer. Some of the people who are there in the inter will know that. So, please bear with my Excel working. Example number 2. STCG under section 111A 20 lakhs. LTCG under section 112A 25 lakhs. How much is taxable? friends?
24 lakhs.
24 lakhs. Good. Because 1 lakh is exempt, my dear friends. First 1 lakh is exempt. Balance only taxable. Business income 80 lakhs. You can have an alternate assumption that what 25 lakhs is after providing that 1 lakh. For class uniformity, because this is not a direct questionable area. This is computation of tax. So I am taking for class uniformity. Okay. Example number 2. This time I'm working together computation of income and taxes. Computation of income and taxes. Business income 80 lakhs. Business income 80 lakhs. STCG on which STT is paid 20 lakhs. STCG on which STT is paid, okay, section 111A, which is taxable at 15%, okay, is 20 lakhs. Okay, LTCG under section 112A, LTCG on which STT is paid, okay, section 112A, 10% after providing for exemption of rupees 1 lakh. So it is net of 24 lakhs only. It is net of 24 lakhs only, my dear friends. It is net of 24 lakhs. This is taxable at slab rates. We all know this is taxable at slab rates. So I am directly working 80 lakhs minus 10 lakhs into 30% plus 1,12,500. Okay, 70 lakhs into 30%. 70 lakhs into 30% plus 112,500. This is taxable at 15%, my dear friends. And this is taxable at 10%. Okay, this is taxable. STCG is taxable at 15%. LTCG on which STT is paid is taxable at 10%. Okay, so total base tax comes to 27 lakh 52,500. Add surcharge at the rate of, oh, I should have also have the total income, sorry. I should have also had the total income. Total income 1 crore 24 lakhs. So total income exceeds 1 crore. Total income exceeds 1 crore but does not exceed 2 crores. So surcharge at the rate of 15%. Surcharge at the rate of 15%. And then add HEC at the rate of 4%, add HEC at the rate of 4%. So my total tax comes to 32 lakh 91,990. My total tax comes to 32 lakh 91,990. Example 3. STCG 24 lakhs. LTCG 25 lakhs. Both are on which STT is paid. Business income 3 crores. Business income 3 crores. Here is a case where total income excluding STCG on which STT is paid and LTCG on which STT is paid exceeds 2 crores. That is, business income is 3 crores, but does not. So 20 surcharge will be 25% on such total income plus there are two surcharges. There are two surcharges. Please remember there are two surcharges. So this is 3 crores. This is 3 crores. 24 lakhs is this amount. Okay. And after providing 1 lakh, I know you will take some time. Please take your time. Please take your time. If at all I am little fast anywhere, take liberty in stopping me. My fast is not because I want to be fast, but I am unaware that I am being fast. That's all. Business income 88 lakh. How I got it? 2 crore 90 lakhs into 30% plus 112,500. 2 crore 98 lakhs, 90 lakhs into 30% plus 112,500. STCG 24 lakhs into 15% and LTCG 24 lakhs after providing 1 lakh is 24 lakhs into 10%. So I'm getting 94,12,500 as the base tax. Add surcharge. Add surcharge. 25% on tax computed at slab rates. 25% on tax computed at slab rates. So here I am taking slab rates. You can write it as 25% on tax computed other than 111A, 112A. Suppose 112 is there, winnings is there. On that also I would have done 25%. In this question I am writing it as slab rates. 15% on tax computed under 111A and 112A. 15% on 3,60,000 plus 2,40,000 into 15%. HEC at the rate of 4% is nothing but on the base tax plus surcharge into 4%. Okay. Okay. Are you clear? Okay. Example number 4. Please work out and tell me the answer. Example number 4. Please work out and tell me the answer. Please tell me the answer. You can text it also to me. No, please text it to me. Text it, please. Text it.
Sir, is it 1 crore 98 lakhs 88,440?
I'll have that answer. 198, 88, 440. I'll wait for the other answers.
Sir, it is 2 crore.
Sir,
Yeah, friend.
sir, is it 2 crore 67 lakh 42,690?
Keep it. I'll check it. I'll check it. I'm getting 2 crore 67 lakh 42,690. 2 crores 67 lakh 42,690. Kindly check it. If I am wrong also, I'll correct it. Please let me know. Two crore 67. So on this 5 crore 90 lakhs into 30% plus 112,500, 15%, 10%, surcharge will be 37% of this amount, 15% for the other two, 50% for the other two. So 2 crore 67 42. Ram, 1 minute. One of our friends lost connection. So 2 crore 67 lakh 42,690. 2 crore 67 42,690. So this is where we have to be very, very, very cautious, because here I am taking easy examples. Suppose this consists of 3 different incomes which are taxable at slab rates. Okay, so when you do the taxation, you need to work out what is taxable other than 111A and 112A. Find out the amount, whether it is exceeding 5 crores and then or 2 crores as the case may be. So the most challenging thing is surcharge nowadays. You will remember tax rates, but to remember surcharge rates, they are becoming more and more difficult. Example number 5. STCG 40, LTCG 50, business income 150. This is a case where including this only it is exceeding 2 crores. Income taxable at normal rates is only 1 crore 40 lakhs. Slab rates is only 1 crore 40 lakhs. Including these two things, 49 plus 40, it exceeds 2 crores. It exceeds 2 crores. So surcharge is only a 15% rate, singular rate. Singular rate of 15% surcharge. Singular rate of 15%. Start working, I'll also complete it. Singular rate of surcharge, please.
Sir,
Listening, friend.
I have a doubt, sir. Now, when I'm looking into the surcharge table, I see that for the surcharge thing, it is given as 37%, or like for example 15% on the income taxable, on the income taxable for some things, and for some few things it is given 37% on such total income.
No, 37% of tax. Surcharge is always computed on tax. It is given on top. Surcharge is always computed on tax. Okay.
Yeah.
25% of, I should have written as 25% of tax on such total income.
Yeah, it is given as 25% on total taxable income and 15% of income taxable.
No. It is 37. Yeah. It is 37% on tax, 25% on tax. Surcharge is always on tax.
Okay, sir. Thank you, sir.
Now, friends, I'm also taking up something known as concept of marginal relief. Okay, concept of marginal relief. Friends, this concept will be applicable where income marginally exceeds the non-surchargeable level or skip in the rates of surcharge. I'll explain you. Where the income marginally exceeds the non-surchargeable limit, more than 50 lakhs. Up to 50 lakhs, no surcharge. So, if it marginally exceeds 50 lakhs or skip in the rates of surcharge from, it is marginally exceeding 1 crore, because up to 1 crore it is only 10%. More than 1 crore it becomes 15%, or up to 2 crores it is 15%, more than 2 crores it is 25%. So that marginal, where the income marginally exceeds the non-surchargeable or skip in surcharge rates, this concept is applicable.
Sir, I just joined back the meeting. Can you please explain the surcharge again? I'm sorry I missed that.
Which one? Which one?
The surcharge part. The surcharge.
Of question
Can you explain
number?
the surcharge? Example number 4, sir. Example number 4, surcharge part. Can you explain again?
Yeah.
My team's close.
Number 4, the surcharge part is our total income, our slab rates comes to 6 crores. So our tax comes to 1 crore 78 lakh 12,500. So surcharge will be 37% of income tax, that is tax computed on income taxable at normal rates, and 15% of this 6 lakhs and 5 lakh 40,000.
Okay, so thank you.
Yeah. In the next question, which we worked out when you were having some connection issues, our total income only by including these two things exceeded 2 crores. Without including, it was only 1 crore 40 lakhs. By including, it exceeded 2 crores. So the surcharge rates is something like this, where the total income, including that only exceeds 2 crores, the surcharge is only 15%. The surcharge is only 15%. So coming back, my dear friends, now concept of marginal relief. Concept is applicable where income marginally exceeds the non-surchargeable, that is more than 50 lakhs, or skip in surcharge rate. Skip in surcharge rate is 1 crore, 2 crore, 5 crore. Marginally exceeds, you need to work out. Okay, let me first work out and then theoretically explain you the concept. Let me first work out, okay, so and then theoretically explain you the concept. Okay, let me first work out and then theoretically explain. Yeah, okay, Ramakrishnan. Right, okay. What will be the tax liability of Talaivar if the total income at normal rates is 51 lakhs? Okay, take your time, have your screen time now, and then we can enjoy it. Okay, example number 6, part A. Total income 51 lakhs. First, you are not taking down, because how to take down, there is a methodology. That's why I am saying, okay, total income 51 lakhs. Tax on such total income is 51 lakhs minus 10 lakhs into 30% plus 112,500. In other words, 41 lakh into 30%, 41 lakh into 30%, somewhere around 1230, okay, plus 1,12,500. Add surcharge at the rate of 10%. Add surcharge at the rate of 10%. 1 crore 34 lakh 250. 1 crore 34 lakh 250. This is unfair. This is unfair. If I am an employee, what I will go and tell my employer is that take back, reduce my salary by 1 lakh. Because by paying me 1 lakh extra, my tax goes up by 1,34,250. What you paid is 1 lakh extra. But my surcharge itself comes to 1,34,250, which is unfair. So came a concept called marginal relief. So came a concept called marginal relief. Look at this. You are only listening. Later we will take it up. This is present. Okay. Okay. Income without surcharge is 50 lakhs. Had I only earned 50 lakhs, had I only earned 50 lakhs, I would have paid a tax of 40 lakhs into 30%, 12 lakhs plus 1,12,500, and my surcharge is nil. Okay, total tax including surcharge. Total tax including surcharge. You are not taking down till I say. Okay, total tax including surcharge. Difference in income, my dear friends, difference in income, if you see, is 1 lakh, whereas difference in tax, if you see, it is 1,64,250. Unfair. How much you are paying me extra? 1 lakh. I am earning income of 1 lakh extra, for which I am asked to pay a tax of 1,64,250. Difference in income is 1 lakh. Difference in taxes were. Therefore, marginal relief. Therefore, marginal relief, which is nothing but difference in tax minus difference in income, which is nothing but difference in tax minus difference in income. Net tax before HEC, net tax before HEC is this much. Okay, add HEC at the rate of 4%, add HEC at the rate of 4%. So total tax payable, okay, 14,69,000. Remember 2 points here, how to compute marginal relief and how to. I am repeating it, take your own time to understand. When will concept of marginal relief be applicable? If the income marginally exceeds, sir, can you tell me exact number? I should not tell you, I will not tell you. Why? Why are you so adamant, sir? No, I'm not adamant. Because this 51 lakhs here, it is normal rate. Suppose it has STCG on which STT is paid, LTCG, winnings. So it is not correct to give you one level and say up to this level alone check. You all know what is marginal increase. So I will tell you as the class goes by up to what level you need to check. Now understand the concept. Coming back to the concept. Income marginally exceeds non-surchargeable. If I had earned 50 lakhs, I would not have paid any surcharge. By earning 1 lakh extra, I am paying a surcharge of 1,34,250. So came a concept called marginal relief. What is the marginal relief? Difference in total tax before HEC. That is wrong. If I am the finance minister, I should actually do inclusive of HEC. But unfortunately, because now you are paying HEC on that component. Please remember, by earning 1 lakh extra, you are paying a 4% HEC. Okay, coming back, let's understand the concept. Okay, difference in income, that is 1 lakh. Difference in tax, that is higher tax you paid 164. This difference is given as the marginal relief and the final tax is computed. This is applicable if the total income is marginally exceeding either non-surchargeable limit or skip in surcharge. Now take it down.
Sir, I have a doubt, sir. Sir, are you able to hear me?
Let me know.
Audible?
Yeah.
Yes, sir. Sir, like let's assume that we are not taking the concept of marginal relief into this.
Okay.
And even if you take this, if you like practically, if you see like even after the surcharge of the normal income, that is the 50 lakhs.
Yes.
Like you end up paying 1 lakh higher, like 13 lakh 60 somewhere around, I guess.
Yeah. You are ending up paying higher. I know. Even without marginal relief, you are paying higher. I am aware of it. Marginal relief is not sufficient. Marginal relief concept should be redefined. Previously, it was perfect. Previously, marginal relief was 1 lakh. Okay. Difference in income, they gave it as marginal relief when it is marginally higher. But now, unfortunately, the whole concept has gone haywire. This is the way of computation.
Okay. Sir, I have another doubt, sir. In this rules of interpretation, you said about beneficial construction, right? So how do we when do we actually use that? Like in which part exactly?
Sir, I will when we go to the provisions, I will tell you, sir, beneficial construction, how it will work. I will explain you in some of the at least 10-15 provisions. I will tell you what is beneficial construction. How it is only if there is a difference of opinion, how it benefits only the assessee. I will explain you, sir.
Yes. Okay.
Sir, Ramakrishnan here.
Yeah,
So once this problem is done, can you just go back to example number 5? I just need to make a note of it. I just
yeah, sure. Once our
thank you.
friends complete it, I will.
Okay, sir. Thank you.
So our friend is asking me example number 5. I'll just a minute go there and come back here. Just a minute go there and come back here. Please wait. I have something interesting coming up in marginal relief also. Ramakrishnan, this is the working for example number 5. So here the total income including 111A and 112A. The total income including 111A and 112A exceeds 2 crores. Exceeds 2 crores. So that's why surcharge is a single aspect of 15%, not like our previous examples.
Okay, sir. Okay. Just 1 second, sir.
Yeah, sure.
Okay, sir. Thank you.
Thank you. Okay. Now I'm going to part B. Now I'm going to part B. Okay. What if Oliver earns an income of 1 crore 1 lakh? Again, there is a skip in the marginal rates. There is a surcharge rate. There is a skip in the surcharge rate because had he earned just 1 crore, surcharge would have been only 10%. By earning 1 lakh extra, the surcharge becomes 15%. Aram say patiently, let's start doing part B. Particulars, present, previous means the before increase, difference. Okay, friends, previous is before increase. Okay, so total income, my dear friends, the present income is 1 crore 1 lakh. The previous, that is the previous level without the increase in surcharge is 1 crore. The difference is only 1 lakh. Tax on total income. We all know how to compute minus 10 lakhs into 30% plus 1,12,500. Okay. And surcharge at the rate of 15% slash 10%. Here it is 15%. Here it is 10%. Okay. Total tax including surcharge. Total tax including surcharge is okay this or this. Okay. Difference is 1,75,125. 1,75,125. The concept of such marginal relief says where difference in tax exceeds the difference in income. Where the difference in tax exceeds the difference in income, concept of therefore marginal relief. Therefore, marginal relief is difference in income by difference in tax. So what is marginal relief? Whenever there is an increase, marginal increase in from the non-surchargeable limit or from the skip of surcharge, marginal relief needs to be computed. How much is marginal relief? Difference between total tax including surcharge and income. That difference is going to be the marginal relief. And don't ask me for one particular. There are books which gives you this is the amount, but don't follow it. It depends upon whether your income includes special rates of taxation, because various special rates, winnings as a 30%, LTCG as a 20%, there is a 10%, there is a 15%. Never go when it is closer to. Let us take for your example. Later, I will again, when assessment of individual comes, I'll again tell you up to 5 lakhs. 1 crore, because there are books which will say 1 crore, 2 lakhs, 36,000 and dot. Please don't go by that. If it is somewhere closer to 1 crore, so 1 crore to 1 crore 5 lakh, quickly once in the calculator you can work and see whether marginal relief will be applicable. To part C, my dear friends, if income is 1 crore 1,50,000, do part C, my dear friends. I'm hitting at 33,73,500. So on 1 crore, 1,50,000, the base tax will be 91,50,000 into 30% plus 112,500. And on that 15% will be the surcharge. On that 15% will be the surcharge. On 1 crore, it will be 90 lakhs into 30%, 27 lakhs plus 112,500, 28 lakh, 12,500 plus surcharge would have been only 10%. Had it not exceeded 1 crore, it has been exactly 1 crore, surcharge would have been only 10%. Difference in tax minus difference in income. So you can see as the income level goes up, relief comes down. Okay, the relief is 42,375 and the HEC giving you a total tax payable of 33,73,500, 33 lakh 73,500. I have not yet worked anything on tax. I have just told you how to work out surcharge if there is 111A, 112A, and how to work out marginal relief. This tax rates are essential because when we go down the lanes of various chapters, we will be in some questions, if it is individual, we will be working out the tax. That's why I have given it to you, not to give a holistic idea now itself. In assessment of individual, we will work out more questions on surcharge, marginal relief and taxation. At that time, you will work out with more comfort. Okay, we stop the session here this morning. At evening, we are going to open up with PGBP. We are going to see today evening between 6 and 10. In between, I'll definitely give you a 15-minute dinner gap. Okay, but only 15 minutes. If you are a slow eater, kindly learn to eat faster, or you can have it anyhow. Your videos are off. You can have it on the table. In the evening, I'm going to tell you what is income. What is income? And hopefully, we start our journey into depreciation. If we start in the evening the depreciation journey, tomorrow morning we would have completed depreciation. That length is the journey. I mean it. That length is the journey. So meet you in the evening again at 6 dot. At 6 o'clock dot, 5:55 I would have logged in. So meet you in the evening at 6 o'clock to continue with the sessions, to continue our understanding into taxes. All the best, friends. Meet you in the evening.